Welcome to another Coinomi Connect, hosted by Duane, featuring our partners at EarnPark, diving into our new partnership. This conversation was recorded live on X Spaces on Wednesday, June 25th, 2026. Please note that the views and opinions expressed in this AMA do not necessarily represent those of Coinomi Wallet and should not be considered financial advice. Always do your own research on any project we discuss. Enjoy the video, and don't forget to like and subscribe to support the channel. Now let's get started.
Okay, I think we can officially get started now. EarnPark, are you still here with us?
Yes, I am.
Okay, so I'm just gonna be Okay, it's already good to we're already good to go. So once again, hello and good day to everyone that is currently tuning in here at Coinomi Connect. This time we're gonna be having EarnPark as our guest. So I guess it's pretty much self-explanatory what EarnPark is going to be about by the name itself. So a park where you earn, or just having the word earn in the name, means that it's something to make some I guess money or profits around. But I guess what better to know more about EarnPark itself than themselves. So EarnPark, I don't know what to call you yet, but nice to have you here and a pleasant day to you. How are you doing today?
Hi, doing great. Thank you for having me. My name is Vera. Nice to meet you. So I lead brand communications and customer experience at EarnPark. So I kind of work between the product, the community, and the story we tell externally. So that's why I'm here today. And yeah, let's get started.
So coming from the name itself, EarnPark, can you tell us more what is what was the origin story of having EarnPark as a name, and I guess a bit more introduction about EarnPark itself.
Yeah, the origin story is an interesting thing. Well, I guess if you talk about the name, it's a place where you can earn or park your coins and earn on them. But basically, EarnPark is a marketplace of different strategies, and the reason it exists is that earning in crypto, it became either sort of too difficult or too complex or too emotional for most people, because on one side you have pure DeFi with great yields, but users need to actually understand wallets, slippage, bridges, all that stuff. They have to kind of manage positions themselves. They have to monitor that constantly. And on the other side, you have a very sort of black box product where users just see a nice APY, but they don't really understand what happens behind it. So we are built to sit between those two extremes, and we want to make digital asset yield accessible to everyone, to people who want their crypto to work, but they don't want to learn about DeFi mechanics, or they simply don't have time to become like full-time DeFi traders. So that includes retail users who already hold like stable coins, Bitcoin, Ethereum, other crypto, and they just want earning options with clear terms without having to sort of, learn the mechanics. Yeah, I guess that's it. So the core idea is not let's build another platform. It's let's build a place where a person can, just open the app, see the options, make a decision, and that's it.
I see. Well, to make that kind of platform, as you mentioned, and you don't not a lot of people have time to to study to become
Mhm.
a full-time day trader. So it means that the team behind this must be quite experienced to be able to make a platform for other people to do something that they don't need to study full-time or having experience about. So can you tell us a bit more about the background of the team behind EarnPark, other than yours truly, of course?
Sure. So EarnPark basically started as a private fund for, the team and friends and so on. And then later in 2023, in 2022, sorry, we launched the first version of the product for users. And we have people from fintech, we have people from crypto, and we have people from Web2 businesses working together on that. We have people from IBM, for example, people who built like top apps in the US. And we also have people who actually do the algorithms, because all that sounds great, but the core team is people behind the algorithms of the strategies themselves.
I see. It's quite a background, of course, related to Web3, and I guess some of them are already as I was reading more about the files, I guess some of the people that might be your target audience are people that uses Web2 products and wanted to make transitions into Web3 financing as simple as possible. But that being said, same. I guess we kind of discussed already a bit about this, but when you create a project, or a business, it's more about solving something. That's for a lot of people, and I guess you've kind of touched on it, being that you wanted to help people have a more simpler way to utilize Web3 financing. So can you tell us what actually is the original problem that EarnPark set out to solve? Because you mentioned about the enterprise customers. So do you have other target audience other than that, as some of the problems that you wanted to solve to solve the original problem, or any other problem that they have that EarnPark can fix?
Yeah, let me expand on that. So in yield, in let's say wealth building, there are a few options. There's traditional finance, there's centralized finance in crypto, and there's decentralized finance. So in traditional finance, the problem for retail users is that there's a very high entry barriers. For example, like minimum threshold for joining a hedge fund, it starts at 200K US dollars, for example. And for like top tier funds, the threshold is like millions of dollars. If we're talking about CeFi, in 2022, the largest CeFi platforms kind of collapsed. We remember the Celsius, BlockFi, all that stuff. And that happened because, as I mentioned, the black box products, because they have all the options, but the risks of these options are not on a separate asset, but on the whole company itself. And that's why what happened. And in DeFi, there is this complexity. You have to learn, you have to spend time, and you have to manage your position. So we're kind of trying to solve all these problems in one product, a product where there's a low threshold to start earning on your crypto, the product where you can see all the risks and all the mechanics and all the conditions outlined clearly, where it's not a black box, where you can know everything and make an informed decision, and it's not complex. You sort of log in, you deposit, you earn. That's it, basically. Have I answered your question?
Definitely. So, what's something that's really interesting for me? We've been talking about a concept, which we just talked about what kind of problem EarnPark sets out to solve, but that was a bit of some oversimplification, and that's exactly what you guys are set out to. So people don't need to study for a long time to be able to utilize the kind of service that you guys provide and earning money for, which is the main idea, especially for people who want to set out in this kind of thing. But the thing is, which is kind of interesting, is you mentioned building digital wealth without FOMO. And as a lot of people here, especially for people that has been in crypto for a long time, FOMO has been one of the key initial initiators, I guess, that makes them really excited. But how do you actually build digital wealth without FOMO in this space that we work with? So what does that actually look like, especially for someone who is just opening the app, and what are they not being asked to do?
Yeah, sure. So for me personally, that means that slow and steady wins the race here. So you have in crypto, you have, well, generally you have like two types of opportunities. First one, you find 1,000x coin, you invest in it, and then next day you buy a Lambo. Second one is you keep steadily earn on your holdings, on assets you already bought in hopes that they will grow with time, and you keep earning on them the APY that, for example, EarnPark provides. So for a user, means that without FOMO means that they're not being pushed into panic decisions. We're not asking them to guess the next big thing. We're not asking them to time the market to jump into a pool because people on Twitter said so, or to lock themselves into something they don't understand because it looks cool. And when a user opens EarnPark, the experience is meant to be structured. They see assets, they can compare that to what they have already in their wallets. They see the terms, they see the APY, the risk level, all the conditions. And the decision is not about like what's everyone buying, and it's what asset do I hold, what kind of level of risk am I comfortable with, and what makes sense for me. And I guess that's what we mean by digital wealth without FOMO, except no, it also sounds cool. It's
Mm.
not about removing risk from crypto. That's impossible, to be honest, and that's dishonest. It's
Yeah, even in
yeah,
trading or traditional trading, stocks and forex, there's always a risk. It's just a bit
yes,
elevated in crypto, but of course, if you don't have risk, then there's no, what they call this. It doesn't make sense to have like 100% zero risk and just earning money as much as you can,
yeah,
especially any kind of investment. And
yeah.
personally for me, I was a victim. I would say the word victim for some people earning that. Okay, by us, it's gonna be time X 1000 after a day and a few hours, and so one project, no, it didn't work out. It rug, lost money, and then so on, so on. Although what you've mentioned earlier is true for maybe less than 1% of people, like invest in the coin and then overnight X 1000 buy a Lambo. But for the other
Mm-hmm.
99% of people actually bought into that are actually the ones that lost money in order for that 1% to make that amount of money. And I think if you already for people who are already experienced in trading and investing, I think EarnPark's promise of having digital wealth about FOMO by, again, not removing the risk as you mentioned, but managing it more and being able to control it more makes a lot of sense, especially for people here that are listening in. I'm sure a lot of you guys have experience investing in a coin thinking it's going to be your game changing, life changing kind of investment, only for you to figure out to find out, okay, it's not going as good as I plan to be. I guess projects like EarnPark is something to look at because again, we've talked about earlier, slow but steady that wins the race without any risk, at least. So that's something that I guess I'm starting to see now, the kind of what do you call this, interest a lot of people should have and would have in their part. So
Yeah.
hmm
Yeah.
oh, sorry, did I cut you off?
No, you basically said what I was going to say, so no worries there. Thank you for that.
Okay, and I was about to say about a typical DeFi platform, something that's, I guess, one of the basics that people needed to understand, other than of course knowing the kind of wallets, the networks, and the thing about gases and slippage and those kind of things. And although for people who are already experienced in crypto, it's kind of like it's normal or regular for us, but for people that's just going into it, it's going to be a bit of something to get used to. So is it something that you divulge those kind of information, or do you just simplify it when you try to show it to your users to be able to just to be more at ease on what they're spending and what they're having?
Yeah. Yeah. So what you asking? Yeah. So we deliberately removed a lot of complexity from the user journey because a user shouldn't need to manually choose a protocol to, wrap tokens, to calculate fees and worry about all that stuff. They just need to understand the mechanics of strategies. They need to understand the risk level of strategy and, how it works and what the conditions are. So that's why we try to expose the things that matter for decisions, like as I said, risk level, payout schedule, withdrawal logic, strategy mechanics, while removing the operational stuff that would otherwise make the experience sort of intimidated for a regular user. And we're not trying to hide risk, we are trying to hide friction. And everything should be visible except technical details. But also, if you go into a support and ask them, to tell you more about technical stuff, they will do that as well because we're not hiding it. So, from you can access that info if you want to, but we sort of think, why would you want to? But also for some algorithmic trading strategies, which were more complex than others, we did implement sort of an additional descriptions, which included like CAGR coefficients and stuff like that. So people could learn more, but we found that that was not very popular. So eventually we just decided to go with the simplest version. And the hardest thing to abstract away from that is kind of the market, because market conditions change. We've seen that a lot in the past months. APYs can change, liquidity in the market can change, everything can change. So it's a real challenge to make the front simplistic as you can with making it not informative enough. And a clean interface, which we pride ourselves with, it has to be backed by like serious stuff, and that's what we're trying to do. Yeah.
I love the fact that you mentioned, you don't hide the risk, but you hide the friction. And I think that kind of friction that you mentioned, which is force and gas slippage, wrapping, is one of the bigger, bigger things that deter a lot of people from using crypto in the first place. I guess personally, in my experience, just seeing, okay, what is this different network? What is this string of random codes? What is this wallet code and things like that? And okay, you know what? I don't have time to learn this kind of thing, so I'll learn about it next time. I'll learn about it later. So I think that's a really great thing that EarnPark actually focuses on. So we can just focus on trading and investing and managing your finances. You don't need for those, I get side-handed stuff where, as you mentioned, the technicalities that doesn't need to be learned and can be solved by, your platform itself. So it's really great that you actually have that kind of insight for people that are not, actual traders, but not our actual coders or day traders, but people that are just getting introduced to this one. So behind this complicated kind of interface that's strategically running, without giving away, I guess, your secret sauce, to say, can you tell us a bit on what's actually happening with the user's funds? Like initially after they put in their money, what comes next after that for them?
So at a high level, once a user makes a deposit, the funds are allocated to the specific strategy they selected. It's not, the deposits only are used for stuff, we are promised they're used for. For example, we have USDT DeFi strategy that offers 10% APY on USDT. That's a strategy that provides liquidity in sort of stablecoin pairs, and earning in that strategy, it comes from trading fees and protocol incentives provided by a few protocols and a few ecosystems. And the strategy manager has to balance all these protocols and monitor that constantly. So the user just chooses an asset and strategy, and each strategy has its own logic, and each strategy has a clear description on the strategy page, and the funds are used exactly for what they're meant to be used. And the important part is that the user doesn't have to manually operate any of that, all these, protocol changes and optimizing these positions. We handle all that stuff, and users The only responsibility of the user here is to read through the strategy page and to understand that their funds are not sitting, idle. We're not having them stored in our pockets and paying APY from God knows where. But these funds are not, they're in protocols and they're working in protocols inside real market. And that unfortunately means that, as we've said before, there's always risk. And that's why we label strategies by different risk levels, like low, medium, and high risk. And that's what users need to understand. That's what we try to talk about as much as possible, basically. That's what I'm doing today, talking about risk levels. Yeah.
Yeah, I mean, it's all about knowing exactly where your funds will end up. Your funds will end up on, not like the traditional banks that we had. We just store it in a bank. We don't know what they actually do with it. So at least you have the visibility or yes, the knowledge and where it comes from. But about the APYs, though, yields have got to come from somewhere, as you mentioned earlier. So where does EarnPark's yield actually originate, and how do you actually keep it sustainable? Rather than incentive driven, because for a lot of projects that we've seen in this space, they're saying 1000% APY in 1 year, those kind of like sometimes 10,000 APY. So crazy numbers, crazy promises, but again, not realistic. So can you tell us more about the yields that you have here at EarnPark?
Yeah, sure. This is like one of the most important questions. And as I've said before, in some strategies, yield comes from different protocols and stuff. But in general, if yield, as you've mentioned, comes from like promotional incentives and it can look attractive for a while, but it will disappear once these incentives dry up. And I'm not saying that it's bad to use these sort of promotional APYs if it's a project you trust. But so our approach is to focus on the sources that are connected to real activity, like demand for liquidity, trading volume, and such. And for example, liquidity providers can earn fees because markets need liquidity, obviously. Market making style strategies, they can generate returns from spreads and trading activity. And some strategies can use hedging or delta neutral logic to reduce direct exposure, directional. And these details differ by strategy, but the principle is the same. The APY should be explainable, and some strategies they perform better in some market conditions. For example, liquidity providing strategies will be um, performing better if there's high trading activity and so on. Sustainability here also means that we do not say that the APYs are fixed forever. We have two types of strategies. First one is fixed APY, and the second type is flexible APY. So fixed APY is being fixed for a month. And at the end of each month, we evaluate the market and we calculate the APY for the next month, and we announce that in advance. For example, we will be announcing the APYs for July next week on June 30th. And if it's flexible APY, it can be up to, for example, up to 10% APY can also be 9% and so on. And that's how we stay sustainable. And I understand that's not as attractive as, 1000 APY sounds like, but that's sustainable and that's going to hold. And the most important part for us is to not make promises we can't deliver on. So we prefer, that approach. Yeah, I guess that's my
Yeah, it's a
answer.
lot more logical to be realistic within those cases. I mean, 10% is already what do you call this? Generous if you're going to compare it to just having your money in a digital banking or just an actual banking thing. So that's already like X10 in terms of having what you would usually have on a normal bank. So I guess that's already attractive for a lot of people that's already well versed and experienced in this sort of thing outside crypto. So basically, in regards to the yield, so from what I understand and from what I've experienced in different kind of yields, so you'll be able to hold your fund for what do you call this, for a set amount of time, either 1 year, a month, or up to a year. Is that correct? You have those kind of options, and of course, the longer you hold your coins for the longer period, the more you'll be able to earn. Correct?
That's not exactly correct. We have
Mm-hmm.
strategies with withdrawals anytime, which have fixed APY, which are paid out daily. So, for example, the 10% USDT strategy, you can deposit today, get paid out tomorrow on one day, and then withdraw tomorrow. But then we also have strategies with monthly withdrawal schedule. These are strategies that will so basically taking out the funds from the pool mid-month can rebalance the pool itself and affect the yield in the pool. So, which is why we are cutting it to a monthly withdrawal schedule. But basically, there's no limit on how long you can.
But is there a limit though on how fast you can hold your funds? Let's say I just put some money here today, and there's an emergency saying that okay, I actually needed to get back my funds after 3 days. So do I still get the earnings that I have for that 3 days that my money was there, even though let's say there was I don't know if this exists in EarnPark, like you need to hold your funds for a minimum of 1 month, so on and so forth. So if I decided to take my funds out earlier because of, let's say, financial emergency, what kind of repercussions will it have, or does it have any cons if
Yeah.
we did that? Mhm.
Yeah, I understand the question. So, if you are in a situation where you may potentially need these funds in an emergency, then it's better to choose a strategy with anytime withdrawals. In terms of anytime withdrawals, you get payouts daily. So if you hold for 3 days, you get payouts for 3 days and you withdraw, and there's no repercussions whatsoever.
Okay, so this, but of course, I guess that means it's going to be less earnings from that, daily earnings. But it's part of the risk that you need to play with. If you wanted to earn more, you need to hold your funds more. But if you want some flexibility, is that how I understand it correctly?
Well, yeah, it's your approach and it's correct as well. What we tell our users is to evaluate the time horizon they might potentially need these funds. For example, if you're short on liquidity, you may want to choose strategy with daily payouts. Or if you want, for example, for Bitcoin to dip even more than now and to buy Bitcoin with USDT, you should go for anytime withdrawals. But if you have funds which you know for sure you will not need for at least 1 month, it would be preferable to go for a monthly withdrawal schedule. But it's basically up to you and up to your time horizon. We don't have any kind of repercussions on that, but we may not be able to pull out funds from the strategy with monthly withdrawal schedule midterm, as I've said, because in that case, it may affect all the users in the strategy.
And not a financial advice for people that are listening. Do not put all of your entire funds in your life savings emergency money in any kind of like stable coins if you know that you might need it someday. Make sure that you only invest what you can afford to lose. And I'm saying this in general in crypto, not in EarnPark, to make sure that you have protection of your own funds. And that's definitely one of the things that EarnPark helps you with. They make sure that you are given the information on the kind of risk you're about to have and the kind of those kind of investment decisions, and telling you the kind of risk that you're about to have in the case that you're about to have. So yeah, sorry, I got cut off a bit, so my train of thought actually got cut off as well. But yeah, moving on to the next one is in regards to the user base that you have from the entire world, because you're not just operating in one country, in one region, but a lot of them, if not all. But the thing is, for each of those regions or areas or locations is having their own kind of rules. So how do you actually navigate that, especially with money? How do you make sure that everyone will have the same kind of standing with using your platform, knowing that each of them comes from different places that have their own set of rules?
That's a very good question. And short version is by constant email screening, by constantly monitoring different jurisdiction restrictions, and monitoring every transaction. And yeah, so I guess in general, compliance starts with accepting the fact that crypto is global, but regulations are different for each region. And there are different user restrictions and different expectations about what we have to disclose, and there are different requirements for onboarding and all that stuff. So the realistic approach is to build it in the compliance process as safe as possible. And that means for us is we have clear terms of use. We require KYC on account balances over 5,000 USD. We do constant transaction screening. We monitor all the restrictions, and also we do have restrictions ourselves on where a product can be used. And in some countries, we're not available, and users from the countries which are not available will not be able to, they will be able to sign up, but they will not be able to make a deposit because that would be, blurred out for them. And yeah, so I guess the trust comes from making it visible and understandable. And we also need to remember, because in crypto space we've come to hate the regulators so much that we forget that the regulations are meant to protect us as users. Maybe it's not as great as we'd like it to, and maybe it's not evolving as fast as the crypto world is evolving, but it will come there, and regulations are there to protect the users, and we're doing everything we can to comply with the regulations.
100% agree with that. And, in the space that we work in, especially with our money, trust is everything because, it's your money. You need to make sure that when you put your money into something, you need to make sure that it's safe and it's not just going to be disappearing overnight and things like that, which unfortunately happens to a lot of investments, especially in the space, in Web3 space. If you're investing into some, I guess, meme coins or things like that, it's inevitable. If for a lot of projects, however good they might sound. So investors often go for your what they call this, the background of the team, and of course the what do you have to prove, like certificates that we have this kind of thing, we have audits like this kind of thing. So basically, what concrete mechanisms, custodies, or audits or transparencies to back up that, I guess your funds are safe kind of claim for people who wants to invest with you guys there in EarnPark?
Yeah, thank you for the question. First of all, no one in crypto should claim that your funds are safe. Unfortunately, even offline banks can claim that. But so after 2022, users became more careful. Thankfully, they should be, and the industry itself, we learned that users need mechanisms that they can verify. And there are several layers with EarnPark. And the first one I already talked about when I mentioned Celsius, for example, closure, that they had, risks spread out for everything instead of one asset. And we have actually information to back it up. I don't know if you remember what happened in October 2025 when there's been like 19 billion in closures in 24 hours. And one of our strategies actually got affected by that. And what happened is that we've reinforced our safeguards, but the most important thing is we always say that our most important safeguard is the fact that we don't have a single pooled fund but different strategies, and that structure is resilient to crypto market risks. And unfortunately, we have the info to back it up because we all wish that wouldn't have happened. And yeah, that's that. Also, the funds are custodied through Fireblocks infrastructure, which is everyone heard of, and that's a widely used institutional infrastructure. On transparency part, we provide proof of reserves, including everything liabilities, reserve ratio, and historical changes, so users can see how it changed and that we're not just making like vague claims. And risk disclosures also. But the thing is, we cannot provide audits for that because, as I've mentioned earlier, we can provide wallet addresses in protocols, but audits are not available because, for example, the funds are in hyperliquid protocol. It has an audit, but it's not ours. I hope you understand what I mean. So for Park specifically, there's also a layer of trust that has to be built. And we published an 8 blocks review of our tokenomics. And the structure was designed to reduce early supply. We recently completed an audit with Certic. And we've completed an audit with SCX, and everyone confirmed that the contract is safe. But we need to be careful with claims because no platform should say that your fund's 100% safe. Because there's always risk. Crypto assets are very volatile, and strategies also carry risk, and there's always custody risk. You may have funds on the exchange and it may be the top exchange, but if something happens to it, what will happen to your funds? So what we can say is that we back our trust claims with mechanisms such as custody infrastructure, proof of reserves, every type of available public documents, and everything, including, ongoing clear communication. Yeah. So I hope you decide the way safe enough for you.
Yeah, I mean, 100% agree with that. No amount of certification, audit certification will be able to assure you that your funds are safe. Yeah, it's already a red flag that if a project mentioned it, oh, don't worry, you're 100% safe on your money. It's guaranteed to make more after a day. It's not good to kind of have those kind of false promises to draw in investors. It's already a red flag for me personally. So it's a great thing that you brought that up. And once again, guys, make sure that you have financially informed before you don't FOMO into investing your money, especially in crypto. Don't look at the kind of audit certifications that they have, because again, as I mentioned earlier, no matter how good of a certification, audit certification that they have, I personally have experiences in losing money on believing those kind of things. Make sure what you check on is the track record of the team. And as they mentioned earlier, the documents, publicly available documents, and the metrics, and I guess anything else, doing your own research on the team itself and asking them is one of the few indicators that it would be more trustworthy. But at the end of the day, never 100% trust any project, any businesses, or not just in crypto, even outside of crypto, of your money that you're not going to lose. There's always a risk in losing money if there's always a promise that you're about to gain more of it. So another thing that's really exciting, I guess, for EarnPark is the TGE, the Park TGE, which is your native token, I believe, is just right around the corner. And before we jump into that, I just want to tell everyone about the current giveaways that we mentioned earlier. Although, yeah, I kind of mentioned a bit of it earlier already, but yeah, $200 worth of park will be given for today's AMA. So make sure you just remain here and be active somehow and listening to the Coinomi Connect right now. Though, so that's $200 in that. So we also have a game called Find the Token. I guess someone will be able to retweet it over here. All you need to do is just find a token and follow the instructions. So spot the hidden logo of our partner EarnPark and drop a screenshot below in that tweet. Make sure you're following Coinomi Wallet and EarnPark and retweet and heart react plus tag 3 friends. So 10 winners will be sharing $500 worth of prize, and it will be distributed at the TGE on June 29th. And it's already, reminded actually about that. Sorry about that. But something that's still ongoing is $1,000 worth of park airdrop. So all we need to do is make sure that you have Coinomi app. It's the last week. I guess this week is the last week to be able to earn it. It's about $1,000 in park tokens that will also be dropping in their post TGE on June 29th, with also some USDC along the way. So if you haven't downloaded Coinomi app or Coinomi wallet, make sure you already are to start earning crystals and of course some rewards that will be given away in part. So make sure you follow us, Coinomi, and of course EarnPark, so you should be able to see it at the page if no one else haven't retweeted it yet. So going back to the TGE that's right around the corner. So for someone hearing about Park for the very first time today, so how does this token actually plays out? So why do we need to have this token? If we need to, if we already have funds, we can just invest the dollars, the USDT that we have or USDC that we have. So what's the point in actually having this park tokens?
Yeah, that's a good question. So, the simplest way to explain Park token is that it's the token of the EarnPark ecosystem. And it's not meant to be a separate store detached from the product. It's designed around the activity that already exists on EarnPark and what we want to build next. So, inside the EarnPark ecosystem, it connects to several areas like staking, like yield boosts for users, like liquidity mining, access to selected strategies which are not available for everyone, and stuff like this. So it's not like buy a token and hope for the best. It's a participation layer around a working platform. And for user, this means it's connected to how they engage with EarnPark. And for a non-user of EarnPark, I would say it's a good opportunity, but it would be better if you are EarnPark user. And it's not a shortcut around risk. And it's a utility layer, and the value of that utility, it depends on product usage, on user activity, and on how we will continue to build meaningful use cases around it. And yeah, that's what we're trying to do for everyone.
And can you walk us through, the listing and what actually happens on day one? And where can people actually get parked? And, what should they pay attention to?
Yeah. So on where people can get park is we're not allowed to disclose the CX. We can do that one day before the listing, which is planned on June 29th. But CX listing on June 29th will be followed by a listing on Uniswap. And what to pay attention to is, please, on day one, use only official links and links from official announcements, because listing days are, when fake links, fake pools, fake contracts, all the scam accounts appear. And even more, I've checked today, there is like 8 fake tokens on Solana already launched. So when what you should pay attention to is contract address and official links, the trading pair, and the unlock structure, because the unlocks are not standard in a crypto space for the Park token. Our unlocks are different, and not all allocations will unlock at once at TGE. And overall, the tokenomics were designed to avoid early concentration of token in the market, and also to think about that the TGs are exciting, but it's also the moment when price discovery most unstable, and nobody should treat day one as guaranteed outcome. And I guess the healthy way to look at listing is, as a start of public market discovery, and not, the end of the story set in stone. Yeah.
So do not FOMO basically on day one, and like seeing lots of greens in the charts. Oh yeah, I should buy in. I don't want to miss out on this. So as EarnPark mentioned, the first day will be one of the most unstable parts of launching the token itself. And best of luck to you guys on having a successful launch for TGE. And of course, I guess it should be a standard for a lot of projects. They do not PM you first. So if they're, I don't know, the admins, owners of the projects will not DM you first. So if someone messages you saying that, okay, we're live actually right now, and then sending you a link to this chart, do not believe those. Unless you've actually DM'd the admins that they have. Do not believe anyone that DMs you first. Any promises that are too good, saying that, oh, it's an early access to the token address, so we can have early buy-ins and stuff like that. Those are too good to be true. So only trust, once again, from the official pages and announcements from EarnPark itself. And of course, us here with Coinomi will be joining in making sure that your guys are informed as well of EarnPark's developments or updates within their project, especially on their TGE. So a lot of tokens launch and then leak value, as you've mentioned earlier. So a lot of tokens normally at launch will go up and then just crash hard at the at the very same day, or worst part, I guess, in a few minutes, because it's really unstable, everything that you're going to be launching in crypto in general, especially with the kind of market that we have today, which is really shaky. I guess that's the right word I can say. So what's been designed to into Park's tokenomics to make sure that it will be stable and then be able to specifically align with the long-term holders with the platform's growth? Because again, one of the promises that you have at EarnPark is it's going to be more realistic, more stable compared to most kind of earnings. So that should I guess in retrospect, it should also apply to the native token that you're going to be having as well. So how are you able to stabilize the value and the usage of the stable coins to make sure that its value is well within controlled, as much control as you can, value wise, for it as possible?
Yeah. I would rephrase it and to say how we are planning to stabilize, because we are planning and we are designing the tokenomics to do that. But what will happen, and we'll learn that in TGE. There's no guarantees, but the main principle here in tokenomics design is to control the supply release. And Park has a fixed total supply of like 1 billion tokens, and the allocation is structured across investors, community, partnerships, liquidity, and so on. So what matters is not only who receives the tokens, but when they can move them. And we had our vesting and unlock mechanisms reviewed by 8 blocks, and according to the audit, so what we have is we have staggered unlocks. On week 1, only tier 6 unlocks. No other tier can trade at that point. Team gets, the first unlock of the team is in 2 years. the first unlock for the airdrop is in 6 months, and so on. So every tier gets their own unlock, and they're weekly. That way, we plan that the market will be able to absorb the new supply if they decide to sell, and that way we'll be able to sort of control that and avoid fluctuations, because so basically one of the biggest problems for token launches always is too much supply on day one, because in regular launches, every tier unlocks at once, plus you have like the airdrops, and these guys are definitely there to sell their tokens. So it dips straight away. So that's what we're trying to avoid. And by all the calculations, we've consulted 8blocks, we've consulted our market maker, and that's unlikely to happen. But if we're being honest, the market conditions on the day of the launch are also an important thing, and we have to take that into account. So what will happen, and the tokenomics alone cannot guarantee performance, and will be tested by the launch, and we'll see where it goes. But we have high confidence in the tokenomics model we built, and we'll see how it goes. Yeah.
Yeah, I guess the main thing here is no matter what happens, the team, no matter what happens to the value of what happens to the token launch itself, is the team will be there to make sure that it is back and it is well managed, EarnPark as well, and knowing, of course, that the team tokens are locked for at least 2 years, and it's of course down to be extended based on what happens. And at the end of the day, one of the things that people are saying, "Oh, the team are selling tokens already," and that's impossible, basically, and what we just discussed, because it needs to have at least 2 years for them to even have an access to their tokens. So that's the kind of trust of the team that you see, that knowing that you guys here that's already gonna be receiving your tokens at TGE and so on and so forth will be able to trade, but the team will be focusing more on the growth of the token and the platform itself for for the first 2 years and more. So how does Park actually connect to the actual product, like staking, APY boost, and maybe on the loyal side of things, if it actually have something to that? And why would a user, and why should a user hold it beyond speculation?
The strongest answer is that Park is meant to connect to how users use EarnPark. If someone already uses a project to earn on the crypto, it can become part of that relationship. For example, users will be able to boost their APY by cutting withdrawal fees up to 30%, which will affect the net APY. They will be able to get additional yield through staking of the token. They will be able to access new strategies which are not available for everyone yet if they're holding Park. So the holding logic is not supposed to be only, maybe the price will go up. It should be also answering a question of the user: does holding or staking give me a better experience inside the EarnPark ecosystem? And the important distinction here is that this is not sort of a prospect for utility, because we already have a product before the token goes public, and we've asked our users what they'd like. And this is not a launch where token will launch and find the utility later. We're trying to attach Park to existing user behavior and then expand it over time. Especially, we'll be soon launching new on-chain protocols and new layers to that. But I'd still be careful not to oversell it, because holding Park, well, essentially, it should make sense because a user believes in the product and wants to participate in the ecosystem, not because they've promised like APY boosts or whatsoever. And yeah, so I guess utility will connect to the project, and once the TG happens, we will launch the first utility, and we'll see how it goes.
And again, guys, do not give your life savings out to any kinds of project, no matter how good it might sound. But having more informed decisions about trading will definitely help out. And EarnPark definitely fills out that role to make sure that you're well informed of your investment decisions within their platform, and especially on their upcoming token that's going to be launching soon. So to follow up to that, once again, we have given away 1,000. We'll be giving away $200 in EarnPark's token here in this AMA, and it was already over, but we're about to give away $500. The winner should be have been chosen now, if I'm not mistaken, and to find the token activity. But of course, what's actually still live other than the AMA is the rewards here at the Coinomi wallet itself. So be sure to have downloaded the Coinomi app. And if you're having fun and using it, make sure to leave a 5-star review. And if you have any questions, feel free to ask us on our social media platforms, especially here in Twitter, Telegram, and our Discord as well. And follow EarnPark for the latest updates, although we will be always sharing their updates, especially on the ones closing into TGE. If you want to be well informed, as we've mentioned, as we've been mentioning throughout the token addresses and such kind of information are still not available. So if some random person or pretending or introducing themselves as people from EarnPark are telling you that we already have the addresses and so on and so forth, do not believe them. The team members from EarnPark will not be DMing you first. So be vigilant in those kind of things. So for the last question that we have, let's say fast forward maybe 12 months past TGE, what does success look like for EarnPark and for park holders? And what's the one thing that you want this audience to do today?
Yeah, that's a very good question. Essentially, success for us means more project growth, real utility implemented, on all the stages, stronger transparency, and more educated users who are able to make informed decisions instead of hype-driven ones. So, more users, more assets, more strategies available, more mature integrations, a stronger on-chain layer. It would, it would also mean that we're not just known as a place with attractive APY, but also as a platform where users can understand how yield works. And, I'd like to say that we're striving to be like the most transparent product out there. And for park holders, success is, I think it would mean that the park token is not just traded, it's also used, and utility should matter, and incentives should bring users into product activity. And on what we want this audience to do today is not to rush into decisions. I would ask the audience to look at the product, to read the tokenomics, to understand utility, to check all the official links, and to decide based on information, not hype. And if you feel like there's something off with it, don't go for it. And if our approach makes sense to you, I would invite you guys to join EarnPark ecosystem and to follow our official launch updates closely, and to follow us and to check out the product at earnpark.com of earning
And
yield and building wealth. Yeah.
so for everyone, do your own research. But the fact that you're already here at Coinomi Connect with EarnPark means that you've already started in doing your own research about the project itself. And again, if you have any doubts or if anything else behind their documentation sounds a bit, sketchy for you, I guess EarnPark's team are more than happy to answer all of your questions to make sure that, of course, your confidence will be with them. But as EarnPark mentioned, in any kinds of project with your money, especially, never fully 100% trust any kinds of project in anything, and make sure that your financial decisions are yours alone to make, not not just some random guy you've been listening to. But I guess the what do you call this? The trust rating of EarnPark, especially being here with Coinomi Connect, definitely shares volumes on the kind of promise and the kind of future that we see as well, being partnered with EarnPark in terms of their upcoming developments, and of course the launching and the TGE of their token themselves. So I guess that would be the last question that we have today. So EarnPark, do you have anything else that you would like to announce other than the TGE? Anything else that we forgot to mention, or that you would like people to look forward to for EarnPark and its developments?
Yeah, thank you for the opportunity. Yeah, so we have the TG enlisting on June 29th. That's the day where Park meets the market and where you'll be able to buy it if you want. So stay tuned for updates. And we'll soon be opening more strategies. So stay tuned for updates on that side as well.
Okay, and that is the Coinomi Connect this time with EarnPark. And be sure to follow us at Coinomi for updates, and EarnPark as well for updates. But yeah, we're going to be sharing their updates regardless, but it's going to be best to follow the best of both worlds, especially with their upcoming TGE, which is really exciting. And you need to have the latest kind of news for updates on what's going to be happening next, especially in the giveaways that we're going to be having. $1,000 worth of Park will still be given away from our platform. And to this AMA as well, the listeners that are here with us until the end, some of you lucky guys will be chosen as winners. So be sure to tune in for updates on the winners for the giveaways. So once again, that is it for today's Coinomi Connect with EarnPark, and we'll hope to see you again on the next one. See ya!